Aloha, everybody. We are maybe the second day after Christmas, December 27th, 2024. I am in Hawaii, and I just wanted to kind of go live. I'm sitting here. Actually, I've got a 6-year-old who is not feeling well, so he's got a temperature, tummy ache, headache. So I'm inside. He's in the bedroom having a nap. So I figured I'd go live and just talk a little bit about. I had a client reach out to me the other day, and I just kind of wanted to share it with you guys and tell you the situation and sort of how we can help. So I labeled this government contractors. If you're in GovCon, you run a contract, maybe it's your first, second, third year. You've got good income, but you've got expenses, and you're writing your income down to very little, or you're paying yourself a wage of $50,000 and the rest is getting eaten up by business expenses. Well, there's a special program that we have for that type of situation, and it's called a bank statement program. And so how that works is, for example, let's say most government contract, let's say you're typical working for a company and you're W-2ing at $180,000. Pretty typical for a government contractor in the Northern Virginia, DC area. So, for example, instead of you be working for a W-2, you're now a 1099. You're working for yourself, and you're working for a contractor. You are a contractor working a contract, making 1099. So they're not taking any of the taxes out. They're not taking any of the Medicare, any of that stuff, right? So you're basically on your own. They're sending you a check. You've got to put money aside to pay taxes with that, and those kinds of things. So at the end of the year, you are down to very little in income. You've W-2'd yourself. Maybe you've got expenses that would be, you would normally not be spending if you were a W-2'd employee, but just the timing works out that you and your family want to buy a house, and you've decided, hey, I'm going to go on my own. I'm going to start my own business. And the timing for that just is not ideal. Well, the bank statement program is a perfect option for that situation. So I'll give you just a mock scenario. So let's say you and the family have found a house. It's an $800,000 house. You are, potentially moving up from a smaller house that you're living in. You've been able to save money for a down payment, or you've got an equity line, or you're going to dip into an old 401k. Let's just say you've got 20% put aside for a down payment. Well, traditionally, since you're no longer W-2, you've gone to a 1099. We cannot use any income from previous years. So now we're basically, and if you've gone through this, you may have, been in this situation where the lender is going to ask for a 2-year history of tax returns to show that you've been able to bring in money, that your expenses aren't too high, and that's how we would calculate your income normally. Well, in this situation, either you are not claiming enough on your tax returns to be able to qualify, and that's generally the biggest reason, is that you just have expenses that you're now able to write off to write down your taxable income, and everybody wants to pay less in taxes. So, but it's a double-edged sword, right? Pay less in taxes. But if you happen to be in the market for buying a house, it's going to be difficult because the lender is going to look at what your bottom line number is on your tax returns. Well, in this situation now, you've got bank statement programs. So I'll take you back 4 years ago. This non-QM market, what we call non-QM loans, was 1% of the mortgage market. Fast forward to 2024, coming into 2025, it's now up over 12% of mortgages out there are done through these non-QM loans, and a majority of them are for bank statement programs. Now, this is not your traditional loan. It's not going to be bought by Fannie Mae or Freddie Mac. These loans are funded by private equity investors, hedge fund investors. They are private money pooled together based off of guidelines for a loan, and then lent out to people that are, obviously small business owners or self-employed. So in this case here, you've got a client. They want to buy you personally, you want to buy an $800,000 house. You're living in a smaller house right now. You want to move up. Well, bad timing. You just aren't claiming enough income. Bank statement program. So we take 12 months of business bank statements, okay, and we look at and we calculate what is coming in into that account. So we look at every single month. We come up with an annual income. So let's say if you're a government contractor, let's just say it's $200,000. Okay. You're by yourself. You don't have any employees. Now you're just working the contract versus being a W-2 employee and working that contract. Well, you write your income. Let's say you pay yourself $50,000 and you write everything else off. So you've got $50,000 of income to work with. Well, that's not going to get you what you need in this marketplace. So how we look at that is we just take the 12 months of business bank statements, we add up that total number. So let's say that number equals $200,000. Well, with these programs, initially we give you a 50% haircut or a 50% expense ratio. So now your income, taxable income, would be $100,000. Well, that's still not good enough to get you to where you want to be. That's not enough income to qualify you to purchase this new home. So what we do is we get a CPA to write a letter saying that your expenses are 10% or less. And in that situation right there, now your income is $180,000. So $180,000 is going to get us what we need in order to buy. So if this is you, if your situation is such that you are a government contractor just starting out, or you've been doing it for a while, but you've been writing off a lot of expenses, this program is for you. Now, it is not a 30, it's a 30-year, can be a 30-year fixed rate mortgage. It can be less. However, it's not going to be at what you're going to see as marketed rates out there online, because this is not a Fannie Mae loan. This is private equity. Obviously, they're going to make a premium on the money that they're lending out. And if you can't get a loan anywhere else, this might be the only game in town. So the interest rates are going to be higher because it's a riskier loan for these people. So that being said, that is one way you might go about getting a loan if you're a government contractor. Okay, writing off a lot of income. So keep that in mind. If you have any questions on that, let me know. Happy to go over the details with you. But that is a bank statement program for government contractor in the DC metro area. Okay, guys, enjoy New Year's. 2025 is coming up soon.